How to record various transactions in double entry bookkeeping and the advantages of double entry bookkeeping. Dear students, let us learn how to record various specimen transactions in double entry bookkeeping. With the help of the following illustrative transactions, it is easy to understand the twofold effect of each business dealing and also as to how the double effect of each business transaction is reflected by one account being debited and another account being credited in the books of accounts. Bought goods worth rupees 500 for cash from X. This is a cash purchase and the accounts concerned are both asset accounts, the goods account and the cash account. As goods have come in, goods account will have to be debited, and as cash has gone out, cash account will have to be credited. There is no need to open X account as X has paid the cash at the time of purchase and is not due anything, and therefore he is not our creditor. Journal entry for bought goods worth 500 rupees for cash from X. Goods account date are 500 rupees to cash account credit 500 rupees. Narration being goods bought for cash from X. Sold goods to Y for cash rupees 400. In this case, it is a cash sale. As Y has paid as cash, the account affected are the goods account and the cash account, both asset accounts. A complete record of the transaction would therefore be made by debiting the cash account as cash has come in and crediting goods account and as goods have gone out. Journal entry for goods sold to Y for cash rupees 400, cash account debtor rupees 400 to goods account credit 400 rupees, being the good narration being the goods sold to Y for cash. 3. Brought goods from B on credit for rupees 600. This is the credit purchase and the two accounts affected are the goods account, asset account and the B's account, personal account. As goods have come in, goods account will have to be debited, and since B has become our creditor, as he has not yet paid the cost of the goods, his account will have to be credited. Thus, the twofold effect of the transaction is brought into record. Journal entry for bought goods from B on credit rupees 600. Goods account debit 600 rupees to B's personal account credit 600 rupees, being the goods bought on credit from B. Sold goods on credit to A for rupees 700. This is a credit sale. This transaction affects A's account and the goods account. Now A is indebted to us. As a result of this sale, his account must be debited, and as goods have gone out, goods account will have to be credited. A complete record of the transaction is thus made by debiting A's account and crediting goods account. Journal entry for sold goods on credit to A for rupees 700. A's personal account debtor 600 to goods account credit 600, being the goods sold on credit to A. Bought office furniture from B on credit for rupees 1000. This is not a purchase of goods and the account affected therefore is not purchase account but furniture account. As this is a credit purchase, B becomes our creditor and his account will have to be credited, and as furniture has come in, office furniture account will have to be debited. Journal entry for bought office furniture from B on credit for rupees 1000 is office furniture account debtor 1000 rupees to B's personal account credit 1000 rupees. Narration being the office furniture bought from B on credit. Bought office furniture from B for cash 1000 rupees. This is a cash purchase of furniture. Evidently, therefore, the accounts affected are office furniture account and cash account. To record this transaction, office furniture account will be debited and cash account credited. The account of B need not be credited at all in this case, as he has paid in cash at the time of purchase. He does not become our creditor. Journal entry for bought office furniture from B for cash 1000 rupees is office furniture account debtor 1000 to cash account credit 1000 rupees, being the office furniture brought from B for cash. Sold old office furniture to C for cash rupees 100. The two accounts concerned here are the office furniture account and the cash account. Both are asset accounts. The cash has come in, so cash account will be debited, and as office furniture has gone out, office furniture account will have to be credited. C's account need not be debited inasmuch as he has paid for his purchase in cash. Journal entry: sold old office furniture to C for cash 100 rupees is cash account debtor 100 to office furniture account credit 100 rupees. Narration being the office furniture sold to C for cash. Received from A rupees 400 on account. The two accounts affected here are the cash account and A's account. As cash has come in, cash account will be debited, and as A has imparted the benefit by paying the amount, his account will be credited. Journal entry for received from A rupees 400 on account is cash account debtor 400 rupees to A's personal account credit 400 rupees. Narration being the cash received from A for on account payment. Paid X rupees 300 on account. The two accounts concerned here are X account and cash account. As we have imparted benefit to X by payment, X's account will be debited, and as cash has been parted with, cash account will be credited. Journal entry for paid X rupees 300 on account is X personal account debtor 300 rupees to cash account credit 300 rupees. The narration being the cash paid to X for on account payment. Paid rupees 500 into bank from office cash. The two accounts affected in this case are the bank account and the cash account. As the bank has received the benefit, bank account will be debited, and as cash has gone out, cash account will be credited. Journal entry for paid rupees 500 into bank from office cash is bank account debtor 500 rupees to cash account credit 500 rupees. The narration being the cash deposited into bank account. Paid office rent to landlord rupees 150. The accounts affected in this case are rent account and cash account. The twofold effect of this transaction is that an expense under the heading of office rent has been incurred, as cash has been paid out to meet that liability. Therefore, office rent account will be debited and a cash account will be credited. For paid office rent to landlord for rupees 150 is office rent account debtor 150 rupees to cash account credit 150 rupees. Narration being the office rent paid to landlord. Note that it is important to bear in mind in this case that although the landlord has received the benefit from us in the shape of cash paid to him, this benefit does not devolve upon him any liability to return us a corresponding sum in cash or kind, and therefore his personal account should not be debited. The amount paid was for office rent, therefore office rent account should be debited and not the landlord account. This point to be understood is that when a payment is made on account of any service rendered, the debit should be given to that particular service account and not the personal account of the payee. Thus, if salaries are paid to the staff, office salaries account would be debited and not the personal account of the staff members. Similarly, if an amount is paid for advertising or for commission or by way of printing charges, the account to be debited would be advertising account, commission account, printing and stationery account, and not the account of the payee. It is only when an amount is paid by us and the recipient has to return a similar benefit in cash or kind on a future occasion that he becomes indebted to us and his personal account will have to be debited. In the same manner, if we receive benefit from any person in shape of cash or kind, and if that benefit has to be returned by us on a subsequent occasion, the personal account of the party imparting the benefit will have to be credited in order to indicate the fact that such party is our creditor. On our returning a similar benefit in future, the personal account of the party concerned will be debited and closed to signify the fact that we have settled our account with him. Paid cash for office stationery rupees 15. The two accounts concerned in this case are the cash account and office stationery account. As stationery has come in, office stationery account will be debited, and as cash has gone out, cash account will be credited. Journal entry for paid cash for office stationery rupees 15 is office stationery account debtor 15 rupees to cash account credit 15 rupees, being the office stationery bought for cash. Purchased office stationery on credit from Vasi and Company rupees 50. This again is a purchase of office stationery and not of goods. Therefore, the account to be debited will be the office stationery account. As this has been a credit purchase, the corresponding credit will have to be given to the personal account of Vasi and Company. Journal entry for purchased office stationery on credit from Vasi and Company rupees 50 is office stationery account debtor 50 rupees to Vasi and Company account credit 50 rupees. The narration being the office stationery bought from Vasi and Company. Received interest on investments rupees 200. The accounts affected here are cash and interest. As cash has come in, cash account will be debited, and as interest represents a source of income, interest account will be credited. Journal entry for received interest on investments rupees 200 is cash account debtor 200 rupees to interest on investment account credit 200 rupees. The narration being the interest on investments received. Paid salary to office staff rupees 150. As a result of this transaction, the accounts affected are salaries account and cash account. As salaries represent an expense, salaries account will be debited, and as cash has gone out, cash account will be credited. It would of course be wrong to debit the personal accounts of the staff members who receive such salary, as no indebtedness has arisen on their part to refund his benefit on a future occasion. The payment made is for service rendered, and therefore the account to be debited should be the account representing the nature of service, salary account. The journal entry for paid salary to office staff rupees 150 is salary account debtor 150 rupees to cash account credit 150 rupees. The narration being the salaries paid. Advantages of double entry. The advantages of double entry may be summarized as under. It brings into record both the aspects of every transaction, the personal as well as impersonal. It provides most reliable information from day to day as to the amounts owing to and by the trader. It facilitates the reference to the details of any account if information is needed regarding any set or series of transactions. It enables the arithmetical accuracy of the books to be tested by means of a trial balance. It affords an easy comparison of the purchases, sales, and the opening and closing stocks of any one period with similar items of the previous period, and thus helps the trader to find out whether his business has been progressing or retrograding. By the preparation of a trading account, the trader can find out how far the anticipated gross profit has been realized. By the raising of nominal accounts for the several heads of expenditure and the various sources of income, a profit and loss account can be prepared at the end of each trading period so that the trader may see for himself whether his business during any given period has resulted in a net gain or loss and how such gain or loss has arisen. A comparison of the amounts expended under various heads with similar items of the preceding period helps to trace the causes of fluctuations in net trading results as also serves to indicate in what direction there has been extravagance, if any. It helps towards the ready ascertainment of the trader's financial position by the preparation of a balance sheet wherein are grouped in a classified form all the assets, liabilities and the capital of the proprietor at periodical intervals. It prevents fraud by rendering any alteration in accounts more difficult and facilitates discovery of irregularity if any exists. In the next lecture, we will discuss about books of accounts, primary books and subsidiary books